Hey guys, welcome back to the channel. Today's video, I'm going to review an asset that I've had a number of questions about. Shout out to Tiffany Wynn, who brought this to my attention and asked me to give a recommendation on the channel. Because we have seen a stock that has tied to some of the most valuable companies on earth just almost go vertical over the last 3 weeks. We're talking about exposures to names like SpaceX, OpenAI, Anthropic, OpenEvidence, Stripe, and other private technology giants that most retail investors have never had the access to. For decades, the game has been rigged in the favor of Silicon Valley giants, the insiders, and the institutional elite. By the time a generational tech company actually files its S1 and hits the public market, the massive wealth generation phase has already occurred in the private rounds. Retail gets left with the crumbs at a peak valuation. Over the last few weeks, though, investors have piled into an asset called Destiny Tech100, or ticker DXYZ, chasing what many believe to be a once-in-a-generation opportunity to front-run the next wave of AI and technology winners before they reach the public market. But there's a massive problem hiding underneath the excitement that almost no one is talking about right now on YouTube, or anywhere for that matter. Right now, investors are paying more than $3 for every $1 of actual underlying assets inside this fund. So today we're going to break down whether DXYZ or Destiny Tech100 is one of the most exciting AI opportunities on Wall Street, or whether this entire move is becoming a dangerous liquidity trap that late investors may deeply regret. That's the point of today's video. If you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. But first, to understand the volume spike that we have seen in Destiny Tech100, we have to understand what exactly it is in case you're not familiar with this. So let me pull that up and walk you through what exactly Destiny Tech, ticker DXYZ, as you can see, is. So Destiny Tech is a closed-end management investment fund, or closed-end fund, essentially. You can see here, they're registered under the 1940 Act, and they intend to invest in a portfolio of 100 of the top venture-backed private tech companies, providing everyday investors like you and me access to these private market leaders for the first time. To be eligible to be included in this fund, companies must be vetted by the top U.S. institutional investors and meet key health metrics overall. I can show you what their current top holdings are right now. So you can see what excites retail investors. If you just take a look, you have Anthropic, SpaceX, OpenAI, OpenEvidence, as I mentioned. You also see, if you look over here to the right, what their focus is. The fund stands at 70% capital deployed across primary and secondary investments, including space exploration, fintech, defense, as well as just AI across the board. So a lot of strong names that each and every one of us are very familiar with. And you can see why this has driven retail hype across the board, because it gives, well, what the fund is meant to do is give ordinary, non-accredited investors like you and me, I said, direct portfolio exposure to the top 100 high-growth, venture-backed private giants. We're talking about foundational stakes in mega IPOs that'll come into the market that you can get into now, while private investors are ramping up the valuation before they hit the market with their IPOs. Companies like we have seen all over the platform, YouTube platform, in the news, like SpaceX, like OpenAI, and like Anthropic. But let's take a look at what they've done over the last 3 weeks, because I mentioned it's been a kind of massive move overall. And I want to show you just how they position themselves too, because they put an elevator pitch out there, which I think is a bit interesting. But you can see here, Destiny Tech, it's a publicly traded closed-end fund that allows everyday investors to buy a piece of high-profile private tech companies. And to explain it easy to investors, it's the public gateway to the private unicorn club. You can see the graph shows over the last month, it's had about 126% return, sitting at closed on Friday at $66.64. But if you just look back to the beginning of May, and you can see here on the screen, on May 1st, the stock was at about 34, right at the end, about 32.56 at the end of April. So we have essentially doubled in the last 3 weeks overall. The thing I want to show you too, which I think is kind of interesting, is just this 30-second elevator pitch. And it says, historically, if you wanted to invest in a massive private tech company like SpaceX, OpenAI, or Anthropic, you had to be an ultra wealthy accredited venture capitalist. Destiny Tech 100 bundles these exact types of private companies into a single fund that trades on the New York Stock Exchange. Anyone with a standard brokerage account can buy a share of these private giants right now. So in theory, it sounds like an excellent idea. I'm not an investor in Destiny Tech, just to be clear and transparent on the channel. But you have seen it has had an explosive breakout, 126% over the last 3 weeks, closed at almost 67 a share. So if you go back, though, if you remember, we showed you right at the end of April, it's about $32.56. So it's essentially doubled. It's witnessed a kind of near parabolic valuation adjustment over that 3-week period of time. And stocks do not generally move 100% in a matter of weeks without a powerful force underneath them. So what is moving this stock in this manner right now? The surge is the undeniable proof that the public market liquidity is completely desperate to front run the upcoming IPO cycle. Investors are utilizing, Destiny Tech 100 or DXYZ, I'll just call from now on in the video, as a liquid proxy to accumulate private tech equity before the companies ever ring the opening bell on Wall Street. But here's where I need to step in and give you my absolute, unfiltered, institutional assessment of DXYZ. Because while the underlying assets in this fund are undisputably world-class, buying the stock at the current level right now is a textbook retail trap, in my opinion. And right now, the actual underlying net asset value for DXYZ sits around about 19 cents or just about $20 per share. And I can show you 2 examples of that. Let me pull it up just to give you to validate that with some fund managers. You can see here at Morningstar, they list Destiny Tech 100. You can see the share price, but if you look at the last actual net asset value of $19.97. And if I jump over one, you can see here CEF Connect, which is the authority, or so they claim, the authority on closed-end funds. They also have the net asset value, of $19.97. So you can see with the stock that's priced at $66.64 right now, where it closed on Friday, you would be paying a staggering 230% plus premium over fair value. So just let that number sink in. You are essentially paying more than $3.30 for every single dollar of private equity the fund actually owns. Even if OpenAI and SpaceX double in value tomorrow, you are still vastly overpaying for your seat at that table. But this is where Destiny Tech gets even a bit more dangerous, in my opinion. Because if you think the management for this fund is going to sit back and watch retail bid this premium to the moon without reacting, you don't understand how corporate finance works. Management is actively deploying a massive 1 billion ATM share sale program. And what does that mean in plain English? I would say, imagine if you were going to a concert and there was 100 tickets, and suddenly management prints another 200 tickets and starts selling them into the crowd. The seats didn't change, the crowd got diluted. So every time this happens and the public market drives the premium for Destiny Tech, for DXYZ, when they drive that premium into the stratosphere, the fund has the authorization to print brand new shares out of the thin air and dump them directly into the retail short and momentum squeeze to raise cash. And for the record, raising cash isn't inherently bad, in my opinion. It allows them to buy more private stock. But remember, they are selling shares at almost $67 to buy assets that are worth roughly $20. And while that technically drags the net asset value up slightly over time, the sheer volume of new supply hitting the market will violently compress the market premium. In my opinion, the fund managers here, they're actively selling into the retail hype right now. So let's draw a line in the sand for this, for DXYZ. I'll give you my clear, unfiltered opinion. If you are an agile, short-term momentum investor or a day trader that's looking to play the daily hype and looking to catch a swift multi-dollar move on a volatile instrument, have fun, manage your risk, and keep your stops incredibly tight. But if you are looking at DXYZ as a core long-term cornerstone of your investment portfolio because you want to own a piece of SpaceX, Anthropic, OpenAI, Buying right now, in my opinion, at these elevated levels is an incredibly high-risk gamble. The real lesson here for DXYZ, it's about understanding the difference between buying great companies and overpaying for great stories. Smart money simply does not pay a triple-digit markup for an asset where structural dilution is actively working against them. My recommendation overall on DXYZ is not to chase the top of the liquidity squeeze. Wait for the emotional retail hype to clear, the ATM shared program to exhaust the buyers, and for the market price to inevitably collapse back towards the structural reality of the net asset value. That's how I'm currently viewing this investment asset right now. But let me know in the comments below if you feel differently. Do you have a different view on DXYZ? Do you have it in your portfolio? Do you think it has more breakout potential, or do you feel the same way that I feel as I just laid out in the case? So, guys, thanks for listening to this video. Hope you're having a great weekend, and I'll see you in the next one. Take care.